Well, hello, Movement Mortgage family. It's Chad Bergman. I'm a loan officer in Denver, Colorado, and I am bringing you Candace in our Movement Mortgage Escrow team. Welcome, Candace.
Thank you, Chad. I'll introduce myself and let you know a little bit about what we do. So I am one part of a two-part team. I am the escrow team lead for our customer service team. In general, servicing will handle any of your payment questions, the administration of your escrow account, handling of property taxes and insurance. That's my team specially. We deal with property taxes, insurance, escrow analysis, payment increases that can be tied to those items, and also property tax research if we come to anything wonky with your parcel information. That's where we pretty much live.
Well, good. And I know this time of year always tends to be a very busy time, especially in Colorado, right?
Yep. We know that our folks in Colorado are going to see some pretty big tax increases across the board. So we're just preparing our team for those questions to come in and how we can best help guide everybody through the escrow analysis process.
Okay. Yeah, I mean, taxes get assessed every 2 years in Colorado. We had a lot of increases in value. We also had some legislation that got pulled back where the state tax rate also did not adjust accordingly like it has in prior years. So we've definitely seen a bump in property taxes. So so in the coming weeks, again, April, May, it sounds like homeowners who have their mortgage with Movement Mortgage are going to get an escrow analysis. And I think we have an example of what that looks like that we'll bring up here. Yes. Could you tell us what is the purpose of an escrow analysis when it comes annually?
Sure. So an escrow analysis is basically the chance where we get to kind of step back in bird's eye view, take a look at your escrow account. When we do that, we take a look at how much we projected for your taxes and insurance. So how much did we actually bank into your escrow account? And then we compare that to the true bills that actually came in. How much was the annual premium renewal? How much was your tax bill this year? We use that information to compare, and then we basically recalibrate, almost like an amortization. We re-amortize your escrow account. So we take that new annual cost of taxes and insurance and divide it by 12. That gives us your new base payment. And then from there, we take a look at if anything increased from what we previously anticipated, did that cause a shortage? And do we also need to collect to cover that shortage as well? So when we're reviewing your escrow account, if you have had increases in your taxes or insurance, you're going to see that your payment increases for two reasons. So the one reason is that base, your taxes and insurance divided by 12. You'll increase there if your annual cost has gone up. The other portion of the payment increase, like I said, is to correct the shortfall that's already happened. So part of the increase is to make sure we don't fall short going forward. And then the other part of the increase is to kind of clear up where we fell out of balance in the previous year.
Okay, that is a great explanation. I sometimes call it a double whammy because you are having to catch up with the shortage that occurred because, again, taxes are paid in the rear. And then, again, we have to also adjust for what's going forward for the next 12 months.
Yep. And then the other caveat to that is that escrow collects in advance. So a lot of people think that, okay, you're going to pay my taxes, insurance, and then you're going to collect the money back from me. It's actually the opposite. We really like to try to bank up and build up your escrow so the total amount of those funds is available when the bill becomes due. Okay.
Well, this is a kind of something we didn't talk about before, but with an escrow account and the rules that you follow, this is a national standard, isn't it? It's not like the Movement just has their own rules. Could you speak to that kind of what we follow?
Yeah, absolutely. So everything that we do in terms of administering your escrow, when we talk about collecting a shortage or raising your base payment, all of this is derived directly from the RESPA guidelines. I definitely recommend anybody who isn't familiar to go ahead and take a look at some of the articles online and familiarize yourself. But essentially the way that I like to put it in the simplest terms is that escrow gives us, or that RESPA gives us this like sliding scale. And we have to hit this sweet spot where we're not over collecting or under collecting on a monthly basis. And that we're also looking at how that's going to impact your escrow balance over 12 months. So we're not over or under there. So we have to make sure that both of those elements are correct so that we're maintaining the RESPA guidelines. We're not overcharging anyone, and we're not holding too much money in escrow, and we can get that money back out to the clients if that should be the case.
Okay. Yeah, that's a great overview. Again, it's good to kind of know that our rules are pretty standard within the industry for any escrow account. Yeah. Yeah. Could you kind of talk really quick on what are the options for repaying a shortage? So someone gets this analysis. Is there just one option to repay, or what's presented to them?
Yeah, so we have two standard options, but something that my team is really good at is kind of looking at those outside of the box situations and what can we do. So in general, if you have an escrow shortage, it will automatically be spread out for 12 months. So they'll take that total shortage number divided by 12 and add that onto your monthly payment. You have an option to pay that total shortage upfront, and then that collection would obviously be removed from your payment. We also have the option to spread the shortage out longer. So say you have a more significant shortage and you need 24 months or 36 months to repay that. That's an option as well. We've also worked with people who are like, hey, I can pay half of the shortage. What can you do with that? So then we would take that half of the shortage payment and then kind of re-amortize the remainder of the shortage to give you that lower shortage spread.
That's perfect. I'm glad to hear we have some options, and again, add those outside based on everyone's personal needs. That's great.
Yeah. Something super important though, I want to make sure that and my team is really good at communicating this when we do a shortage spread. If you have a shortage and you have it spread 36 months, your loan will still be reanalyzed every 12 months to pick up these new tax and insurance things that have gone on. But your shortage spread, so say, for example, I do a 36-month shortage spread, and 12 months into that, we do my next annual analysis. You'll still have 24 months left on that spread. So that analysis should have a 24-month spread until we run it back down to 12.
Okay, perfect. Yeah, that totally makes sense why you do that. Yeah. A question that comes up often is, how can I avoid an escrow shortage going forward?
That is a great question. The way that I like to kind of talk about this and get in the mindset of it is that some people will look at their escrow kind of like a crock pot. Like, I'll set it and forget it. I have it all set up with my lender. I don't need to engage in these tax bills. I don't need to engage in letters that I'm getting from my insurance carrier. I would say that's actually the biggest no-no when it comes to escrow. So you definitely want to be very self-aware of these bills that are coming in. And that's because your escrow account is only going to be analyzed on a set schedule. So if you become aware of a higher tax bill or a higher insurance bill that's happening outside of your annual schedule, it's a really good idea to reach out to our team at servicing@movement.com and kind of engage with us to see if we can adjust the payment then, instead of waiting till your mass analysis. And at that time, the shortage has grown because we've been collecting short for this time period. So the best way to manage that is to keep an eye on your tax and insurance bills as they come. And if you notice anything that has a sharp increase, first of all, reach out to that entity, reach out to your tax entity, reach out to your insurance carrier, get an understanding of why it's increasing.
Yeah.
And then you can either make changes at that level, or you can reach out to us and say, hey, I just need to have my payment adjusted now so the shortage doesn't continue to grow. And we can do that.
Okay. And that led me into my other question is, does an escrow account only happen once a year? And it sounds like it could happen with a phone call if something changed.
Yep. On a manual, let me backtrack. On an automatic setting, it does only get analyzed once per year. But anytime there's a change, if a homeowner wants to reach out to request what we call a manual or off-cycle analysis, we can do that for them.
Okay. Wonderful. So something that we've talked about and not everyone knows about is that there's sometimes opportunities for people to drop their taxes. So there's senior tax exemptions and there's veteran sometimes exemptions. These are a lot of times county specific or state specific. Do you sometimes see those, and how do you become aware of those?
Yeah, absolutely. So the first thing, again, I would encourage anyone to do anytime there's any change that either you've initiated with your tax entity or that they've reached out to you letting know that there's a change, please contact us at our inbox. It definitely helps for us to get any documentation tied to that. So if you have an approval letter for an exemption or an estimate document saying how much your taxes are going to be with that exemption, you want to reach out to our team directly. And then we will work hand in hand with our subservicer to get your escrow updated, and we can do an off-cycle analysis if it comes to be that your taxes have been significantly reduced.
Okay, super helpful. Super helpful. I think we touched on it, but could you just explain when someone chooses to change their insurance carrier, which there happens quite often. Again, we sometimes see insurance goes up, people want to shop it around, get a lower premium from another carrier. What are the steps for making those changes with servicing?
Yeah, absolutely. This is actually one of my favorite things to kind of educate our homeowners on. Because handling this process well can make all the difference between having a huge unmanageable shortage and understanding and knowing where you're at with your escrow account. So if you're at your renewal date, so say you're going to go ahead and let the current policy run its course, and when that one ends, I'm going to pick up another one that's going to butt right up with that coverage date. All you really have to do is send that policy into us at servicing@movement.com, and we can facilitate that change and have the new policy paid from escrow. Where it gets kind of sticky is if you're in a midterm situation. So you're 2, 3, 4, 5, 6 months into your current policy that's already been paid from escrow, and you're wanting to switch and have this new policy paid from escrow. What we typically recommend to best position yourself for your next escrow analysis is to pay the new policy out of pocket, and then you'll get refunded from the carrier you're canceling. You would pocket that refund to kind of offset your out-of-pocket costs. And all of this, you reach out to our servicing team again, and we'll walk you through this step by step. But it's best to do it that way so you're not overdrafting your escrow account by having 2 policies paid back to back.
Yeah, no, that's very true. I think a lot of people don't understand when they cancel an existing policy, it's a prepaid policy. So yeah, like you mentioned, they'll get a refund of that unused portion of it.
Right. And we understand, obviously, in everyone's case, they're not going to be able to go out and pay a $1,200, $5,000 policy, what have you, out of pocket. Yeah. So if it's absolutely necessary, our team can go ahead and initiate that payment from escrow. It's just going to be super pertinent in those cases to apply the refund from the other carrier back to your escrow account.
Yeah. I've seen homeowners, again, pocket this refund and think it's their money, and then it becomes pay the piper on the escrow analysis because that wasn't refunded back in there. Okay, very good. Well, I think we're going to talk about not only do we have access to Movement Mortgage servicing through phone, email, online, which is, again, a ton of tools. I'm just so excited with everything that we offer from a mortgage servicing standpoint. But we also have a mobile app. Can you kind of talk about our mobile app and how to access that?
Yeah, absolutely. So in order to access our mobile app, you'll want to start first from like a PC or a tablet and access our customer portal online. Okay. Here are some step-by-step instructions on how you would create that account. You'll need your loan number to create that account. There's also some password requirements. You want to have a capital letter, lowercase, a symbol, those kind of things. But once you are registered online, you can then download the app onto your either iPhone or Android device and log in with those credentials. From there, there's a wealth of information available to our customers. Any documents that have been sent to them will be imaged there, billing statements, of course, escrow analysis. You can see your escrow history. You can see your payment history. It even gets down to letting you know, this is how much we paid for your taxes and insurance last time. Our next payment's going to be projected on this date. So it really gives you those tools to, like we talked about, be proactive about your escrow shortage or your escrow analysis. And there's also forms available on the portal if you're someone who's trying to remove your private mortgage insurance, or if you're trying to remove your escrow, or if you want to add escrow. All of those forms are available at your disposal at the client portal. Awesome.
Wonderful. Again, I love all the tools. There is always a chance, it's always a small chance, that Movement may sell or transfer your servicing. If that ever happens, what can a homeowner expect by moving to another servicer?
Well, from our end, we send out a goodbye letter to let them know that their loan is being transferred. It gives them all of the contact information, payment address, all of those things they'll need for their new servicer. They'll also, at the same time, get that communication from the new servicer, welcoming them onto that platform. As far as their auto draft, a lot of times the auto draft does not transfer, so they'll want to contact the new servicer to set out the auto draft. But the most important thing about all of this is that there is a 60-day window that you're protected, because we understand as a lender that we're changing everything. We're changing the website you use. I mean, we're not changing it, but you're going over to a different company. Yeah. So the payment methods may be different, all of that stuff. So there's a 60-day window in which you're protected from any negative credit reporting or any late fees as kind of the dust settles and you get acquainted with your new servicer. So that's the biggest piece to keep in mind. But in general, these entities, these sub-servicers and lenders, we operate off of federal standards and regulations and things like that. So your experience across the board should be pretty seamless. All of these companies pretty much operate on an industry-wide standard.
No, that's a great explanation. And again, it's not back in the day. I've been doing this a long time, Candace. I'm sure you have too, but it's not back in the day where it was a hot potato situation where mortgages would jump around from servicer to servicer. That happened a lot around 2008 with our financial crisis. But for the most part, I think mortgages stay with us and stay with servicing for a long time.
Yes, in the majority, we hold most of them.
Yep. Well, this is amazing. You're a wealth of information. I love your team. You're so easy to talk to. You guys are proactive, problem solving. Again, there's I think few companies that actually reach out, when there's not a problem, and just, again, there's a lot of solution and problem solving that you guys provide. I'm very grateful for you.
Yeah, absolutely. We're happy to help. If I had to give any parting wisdom, it would definitely be, even if you have everything set up on auto billing, auto drafting, I'm getting everything by email, check your mail. Be very diligent about checking your postal mail if you're a homeowner. And if you ever get anything in the mail that seems off regarding your taxes or insurance, please reach out to my team directly, servicing@movement.com, and we'll dig in for you and give you the best guidance.
That's wonderful. I've even seen it where, again, there's fraudulent information that kind of comes across sometimes. People need to be very, very aware that there is that, unfortunately. So again, being proactive, calling servicing, and just talking through it is the best course of action.
Absolutely.
Yeah. Well, again, how can Movement Mortgage clients reach out to your team? What's a good phone number, good email address?
Yeah, absolutely. So the best way to reach my team, especially if you have documentation, if your question is regarding something that you've received in the mail, it's going to be best to pursue us by email. And that's going to be servicing@movement.com. And then if they need to contact our customer service directly, their phone number is 855-979-1084. But strongly encourage, if there's ever like a delinquent tax issue or urgent insurance cancellation, come to our email inbox and we'll have someone standing by to dig right in.
Amazing. I love it, Candace. I love this conversation. Again, it's going to be an interesting time with these escrow analysis statements that come in the mail. You guys are going to be busy, but I know we'll get through it. So thank you so much for walking us through the common questions.
Yeah, absolutely. You're welcome.
Take care.